Hey everyone, it's KAF with KAF Investing here. This video is going to be talking about low float stocks. What are they? Why are they so famous in the day trading world? What causes them to do the things that they do, and how can you go about trading them? Low float stocks are really a blast to play, and the market will kind of bounce back and forth from when low floats are really a hot topic and tons of people are trading them and they're making insane, plus 100, 200, 300% moves in a single day. And then other times they tend to have less of an effect and less of a pull on the market. But let's get talking about them here. So first thing about these low floats, I want to kind of illustrate an example here. All right, this is going to be, excuse my drawings here. I'm not the most tech savvy person, but hopefully this will help illustrate a little bit. Here we have a seller and he's selling pies. Okay, each of these blue circles represents pies, and he sells these pies for $1 each. And every morning he wakes up, makes his pies, sells his pies, and three buyers come by and he sells each pie for $1. Every day he makes $3. So the overall value of his pies are $3. In the stock world, we would call that overall value, we would refer to that as the market cap in this sense. It's basically the share price times the amount of shares that are out there. Or in other words, it's the amount of pies that are out there times how much the pies are worth. It's the total value of the pies. Now, things get a little bit tricky when you introduce um, a fourth buyer here. Okay, when you introduce a fourth buyer, the demand is going to increase a bit for those three pies. So naturally, the seller, is going to increase his price for the pies because there's more of a demand for them. So somebody's going to be left out. The buyers basically bid against each other, for the pies, and that's going to bid the value of the pies up. So if you notice there at the bottom, the total value of the pies, or in the example of stocks, the market value increases from $3 to $3.75. So the seller is happy when there's a greater demand for his pies. It's going to cause the price of his pies, the value of his pies to increase. Now, in this sense, what happens when you lose a buyer and there's only two buyers and the demand is less? Well, in this case, if the seller wants to sell all of his pies that he made, he's gonna need to decrease the price that he is selling these pies for in hopes that someone else will be willing to see the value of these pies and be willing to buy it and take them off his hands. So in this case, the total value of his pies decreases here. Okay, now you might be thinking, what does this have to do with low float stocks? I'm going to tie it in together here shortly. Now, let's talk about news in the low float world. Okay, let's stick with our example of our pies. All right, let's say that this seller and the maker of these pies announces that he's going to start putting in Georgia peaches in his peach pie. Well, it just so happens that a week ago, Georgia peaches were just awarded the best peach in the world. Okay, so there's tons of talk about how Georgia peaches are just incredible. And this seller decides to put them in his pies to try and increase the value, to try and ride off the hype of that news a little bit. So his pies are still pies, they're still peach pie. Now, yes, perhaps they are better, depending on how you feel about Georgia peaches. The taste may be better, but it's still pie, right? I mean, it's not gonna, it shouldn't make too much of a difference here. But due to the hot topic of the Georgia peaches, like I said, if they were just awarded this award last week, this goes ahead and creates a huge influx in demand for the peach pie. Okay, as I'm going to illustrate here shortly. Now, why am I bringing this up? Well, there are some real life Georgia peaches in the stock trading world. And some of you are probably very familiar with the most recent one, which is blockchain. Basically, what happened anytime a company released news about that had the word blockchain in it, the stocks just went crazy. And because so much of that hype was off of this new blockchain technology and how it related to cryptocurrencies and how efficient and awesome it was just the new thing. So there's probably about a 2-3 month period where any stock that mentioned the word blockchain in it just went nuts. We're talking plus 200, 300, 400, sometimes even 500% in a single day. You'll see this example here I have in the bottom right of the corner here. This is LFIN, and perhaps some of you remember this stock ran from $4 to $142 in 2 days. That is not a joke. Okay, $4 to $142 in 2 days. That's an increase of 3,450%, and is really all because they basically mentioned blockchain, that they were going to try to utilize blockchain and some things with cryptocurrencies. Okay, now did that really cause Elfin to increase in value from 3,450%? No, absolutely not. But because of the hype around this news and the lower float that the stock had, it caused the stock to make an insane move. Now, some other ideas of some types of news that have caused low float stocks to just go insane in the past is artificial intelligence, and that is one that is still, you'll see, create quite a bit of hype. Is, the tech world and things continue to draw a lot of interest. Another one, as you'll remember, probably about 20 years or so ago, was the big .com bubble. Lots of people refer to this as .com. If a company came out and announced that they had a website and added .com to the end of their company name, that stock did a very similar thing. It would just go nuts because it was just a big hot topic. And if a company was heading into the internet, age and the .com era, then that means that they were going to be a super successful company. At least that's kind of the picture that was painted. Now, of course, there was a big .com crash, and there is big crashes with pretty much all of these low flow, insane parabolic moves. They almost always come back down. So that's also something you want to be very aware of, and cognizant of. So now let's go back to my Georgia peaches, right? Let's talk here. The seller, he has his pies there, and he's selling these pies for now $3 each because he announced that he has these new Georgia peaches in his pies, and people are just coming from all over to come in and try and buy his pies. They're outbidding each other. Remember, these pies were just $1 a pie each, but now because all these bidders are so hyped about the Georgia peach news, they're bidding each other, and you can see it increases the total value of his pies threefold, and twofold, I guess, from $3 to $9. And you have to ask yourself, what is the deal? Are these pies really that much better than they were previously? The price has tripled. What's that about? And that's when you kind of have to be very aware. Then this is when you start to see a pump coming. And then it gets referred to as a pump and dump. Okay, and that's what we see with stocks a lot, is a pump and dump, as we will talk about here. Also, in connection with all these low flow stocks. But I hope this illustrates a little bit that the pies, for example, they're still pies. Okay, there's no reason for them to make this huge jump, but it's so much of the news and the hype, and when you get a very large demand for something that doesn't have a lot of supply, which basically means low float, as I'll talk about here in a second, that's when you start to see some really crazy things in the stock world. So what is a low float stock, and how do you measure it? What's the criteria you're looking for when eyeing a low float stock? Well, here is some general rules to keep in mind with low floats. Over here on the left, I list all the share float numbers you want to be aware of, but over on the right, I go ahead and list the market cap that you also want to be aware of. Okay, now people talk about low floats all the time, but a lot of times they overlook this idea of market cap. And quite truthfully, market cap actually is more important, in my opinion, than what the actual float is. Okay, so a share float of 0 to 2 million is going to mean that the stock is a nano float. Okay, really anything under basically 100 million shares float is going to be a small float. Now, how do you calculate the share float? Let's go ahead and explain that a little bit here. The share float, the way you find your share float is you're going to take the total outstanding shares that a stock has issued or a company has issued. And then what you're going to do is you're going to subtract all the insider holdings and restricted shares, basically shares that cannot be traded in that company. You're going to subtract them from the total outstanding shares, and that's going to give you your share float. Now, market cap, you simply are going to take the outstanding shares and you're going to times that by your share price. That's going to give you your market cap. Now, why is that important? Okay, well, you'll see there tends to be a connection with stocks that are lower float will also tend to have smaller market caps, but this isn't always the case. If there is a stock that has 2 million shares, their share float is 2 million, but the share price of each stock is $1,000, well, that's no longer really a small cap. Now, if it's the stock has a 2 million share float and the share price of the stock is $1, well, then that's only a $2 million market cap. That's a very tiny, tiny market cap. And that market cap can be influenced very quickly with the slightest increase in demand for that stock. So the market cap basically tells you how much money needs to flow into a stock in order to make it move. The higher the market cap, the more money it's going to take to move a stock. The lower the market cap, the less money it's going to take, and the easier it is for a stock to make drastic moves upwards or downwards. Now, how can you find the share float of a stock? Well, there are quite a few ways I've listed here at the bottom. You'll see within our chat room, we have a cool tool called the StockBot. And if you join our chat room, we'd be happy to tell you more about StockBot and how it works. But it's a great tool that's very easy way to find the share float of stock as well as other important information about the stock. But there are other ways. Perhaps you've heard of FinViz, there's Yahoo Finance. You can simply Google search the name of a stock and put in share float, and You'll probably find some numbers, but chances are it's not going to be overly accurate. The way, in order to get the most accurate read on a stock's float, is to take a look at their SEC filings. Take a look at their most recent quarterly report. When have they done offerings and things like that? Now, perhaps you are familiar with offerings. An example of an offering, let me go back here. Let's go back to this page to help explain what an offering is and why people in the day trading world tend to be so scared of offerings. Well, in this case that I've illustrated here, there are 3 pies selling at $3 each after the news of the Georgia peach was released. Now, everyone wants pies with Georgia peaches, and then people are losing their mind coming from all over. Well, the next day, the seller decides to make more pies because there's such a demand for it. So that's what he does. The seller makes, the next day we'll say he makes 10 pies. Well, because there's more pies, the buyers aren't bidding out each other as much. There's more pies, the supply increases. The demand stays the same, but because the supply increases, if you've taken any basic economic principles, that's going to cause the price of these pies to come down as the supply increases and demand stays the same. So that's basically what an offering is. An offering comes in and they release a whole bunch of new shares to the public to be traded, typically through institutions and things like that. So the way to think of an offering is just think of it, if this pie seller here woke up the next morning and instead of making 3 pies, he decided to make 20 pies. The price of each pie will decrease because there's more. The supply is more, it's greater, they're not as rare, they're not as special. There's a lot more pies to go around for everyone. So people aren't trampling all over each other to try make sure they're outbidding each other to get themselves a pie. So again, here's the criteria for low float and market cap. I encourage you to perhaps screenshot this, take a picture of this or so, and refer to this as you're looking for low floats, and it should be quite helpful. Now let's talk about some real life examples of low float stocks. This first example I want to talk about is ZSAN. This is a stock that's been making major moves in the last month or so. You'll see here this stock was trading at just about 360. Yeah, it was 361 not too long ago, and within the course of about 2-3 weeks, it traded all the way up near $30. So the stock moved from 361 all the way up towards $30. Okay. Now, nothing really special changed about this stock. In fact, this company they released some news, but was not very significant news at all. It wasn't even like a buzzword news like blockchain or anything like that. They released some positive news, but because it was such a low float, so many traders were waiting for any type of positive news to be released on this stock that as soon as it did, people jumped on it. And so we had a huge influx of buyers because they knew the float was so low. They knew the potential of the type of run this stock could make. So people jumped all over it, and you see that insane volatility from $3 all the way up to $25. Now, this stock has since pulled back all the way back towards, I think $8 or $7 or $8 now. So that's an explanation, as I mentioned before. When the stock does make huge climbs like that, it almost always comes down because with low floats, unless they really announce something that has fundamentally increased the value of their stock share, this is typically just a low float kind of parabolic pump and dump type play. So you have to be very careful. I know it's easy to get money signs in your eyes when you see that the stock's moved from 360 all the way to $26 and you think, I'm just going to buy low floats and hold them forever. That does not work out. This does not work out well at all because they always come back down, and sometimes they can move downwards, just as fast, if not much quicker than they moved upwards, and you could have a hard time getting out of them, and it could be really, really ugly. Another example, this is RKDO, which has an extremely low float, only 500,000 shares available to be traded on the market. This stock made a move from $3 to $66. I was actually swinging this stock. I bought it at about $6. I sold it the next day at I think $8. It was a fantastic trade. But then 2 days later, it hit $70 almost. Now, I bring up that example because, yes, in hindsight, I can say, why didn't I just hold? That would have been 1,000% increase return there. But it's just not realistic. There's no way to hold and just hope on these low floats. Okay, you have to trade them quickly, safely. They tend to be very, very volatile. They rely a lot on volume, and they can be manipulated very easily by people buying as well as people selling. So you want to be very, very careful, okay? And this stock as well, RKDL, has come way down, currently trading at $24 or so, which is less than half of its highs from that spike all the way up near $70. So hopefully this is helpful with low float. Please be careful trading low floats. They can make insane runs, but trade them carefully. Okay, make sure you have hard stops in. Don't get caught in these types of halts. Low floats tend to be halted a whole bunch. I don't encourage you to hold and hope low floats, but they make for great momentum plays, especially when fresh news has come out on a low float stock. Be sure to look for these. They can really be a blast to play. So hopefully this was helpful. If you have any questions or thoughts, if you like what I did, if you didn't like what I did, please let me know in the comments. I'm always open to feedback. Also, if you want to join us in the chat room on a free 2-week trial, head to kafinvesting.com, fill out the form there, and we'll get you in on a free 1-week trial. No risk, nothing like that. We don't need your credit card, anything like that. Just come join us and check us out and see if you like it. Also, you can follow me on Twitter at kafinvesting.com for more updates on the chat room and for more educational material as well. Hope this was helpful and happy trading.